Hi everyone, welcome back to One Finance. And uh, to those who are new to this channel, thank you very much for um, subscribing. And I hope that you will learn new things. Okay, so in this video, we're going to cover GInvest investment products by ATRAM. So if you can recall, I have actually uploaded one video on this regarding their money market funds, but it was the time before when money market fund was the only investment offered via GInvest. I think that was last year. Okay, so now since they have new products rolled out, let's try to go over them. Okay, so let's talk about the risk-reward trade-off. Putting on the risk-reward trade-off and in relative to GInvest products here, we actually have five. Okay, so I think they started offering the rest of the funds other than money market fund as early as March this year. So if you are going to relate them to the risk reward trade-off, their arrangement will be like this. So if you're going to look at, we have ATRAM peso money market at the lower portion of the chart. So that would mean that it's a very conservative, low risk, low reward as well. So if you move to the next level of asset, that's going to be the ATRAM peso bond. So that's a moderate risk perhaps, and then you have moderate reward. Okay, so the next assets here are actually the risky ones because they belong to the equity or let's say stock classification assets. So here we have the equity smart index, so that will be high risk, high reward. And then we have consumer trends and tech feeder fund, which are both tracking global equity markets. So that's why they are or they have higher risk compared to the Philippine Equity Smart Index because all of these assets here are tracking the domestic performance of the Philippine market, while these two funds here are tracking the global movements of the equities market. So that's why they are classified as higher risk, and then they are also expected to deliver higher potential reward as well. Okay, so the composition of that, meaning how are you going to design your portfolio? It would be based on your risk tolerance and your, let's say, objective time horizon in investing. So you could focus on, it's either focus on conservative ones or you build more on the moderately conservative ones. We have the bond funds, or you can just entirely focus to the equity baskets here if you are let's say aggressive investors. So let's try to discuss them one by one, and let's start with the ATRAM Peso Money Market Fund. So it's a money market category asset. So we all know that money markets are, or money market funds are investments with maturity of less than 1 year. So they're very conservative. An example of those are time deposits, you have your treasury bills and commercial papers. So this, in fact, is the most affordable UITF investment in the country by far. As of March 31, we have a minimum of only 50 pesos investment and an additional investment of 50. So minimum holding period is none, okay, and then you have the trust fee of only 0.77%. So how's the fund performing? You're looking at December 2013 up to March 2021. So that line is the benchmark, and the blue line is actually the performance of the fund. So very consistent, very obvious uptrend line there from 2013 to 2021. Okay, so the performance of the fund for a year is 0.62%, and for 3 years, that's a 6.41%. So roughly an average here, if you're going to look at for 3 years, that's an average around 2%. Cumulative, uh, okay, that's cumulative. So what's inside the money market basket? You have here a bunch of RPTB, so Republic of the Philippines Treasury uh, bond, I guess. or treasury bill. Okay, so you have here treasury bill. They have different codings though, but this is usually the T bill or treasury bill. So you have most of the top, let's say 2, 4, 6, 8, top 8 of these top 10 are actually treasury bills, and you have a couple of, let's say, time deposits from Rizal Bank, and I think this is a commercial paper from San Miguel. Okay, so moving on to peso bond. Now this fund is classified as a long-term bond fund. So if you can recall in our basic modules discussion, we classified bonds according to three categories based on their tenor. So you have intermediate bond funds if they are bond tenors of 1 to 3 years, and then you have medium term, that's if that's 3 to 5 years. So this one actually belongs to the long-term bond fund. So that would mean that the length or the tenor of the bonds are more than 5 years. Okay, so still minimum investment is 50, minimum holding period is none, and the trust fee now is 1.09%. So the logic, guys, in interest fee is that the more risky the asset is, so it's going to be more difficult for the fund managers to manage it. That's why it's more expensive as you go along to higher asset classes. So if you can recall, in money market that's only 0.77%, but this time it's above 1%. So basically because there's a risk, or let's say more risk entailed in managing bond funds compared to money market funds. So how the fund is performing way back 2014 here, it's around 100 pesos per unit, and as of March 2021, you can see here that it's hovering around 100 or almost near 130. So for 1 year, that's 9.30% cumulative performance net of taxes and fees, and for 3 years, that's around 21.6%. Okay, so what's inside a basket of peso bond fund? Now you have here treasury bills. Okay, we have a very huge allocation, roughly around maybe around uh, almost close to 40, and you have your treasury notes, government securities here, and you have some corporate bonds here maturing in 2025, 2026, yeah, even in 2027. So it's around 51% government securities. So that will be considered as risk-free. And then you have corporate bonds here, and it has some cash or money market equivalents here, around 40%. And for ATRAM, Philippine Equity Smart Index, so we are now moving to the higher asset class equity or stock funds. So that's why here we have a higher trust fee as well. So remember that's almost close to 1% or flat 1% in bond funds, and way back in money market funds at 0.77. Now it's above 1%, basically because this is more risky asset and more difficult to manage. So same minimum investment and holding period, and the performance of the fund. Yeah, for 1 year, okay, it actually performed 19.84%. But if you're going to look at the 3 year cumulative, it's actually negative 70%. Now it's simply because of this drop here. This is the drop of the COVID-19 economic restrictions and market volatility. So that's actually around 20-30% drop from its high before COVID. So if you're going to look at the 3 year, okay, that would cover the levels from here. But if you consider 1 year, then that's actually coming from the bottom here. That's why the 1 year is actually positive 9.84%, while the 3 year cumulative still registered negative 17% because it's coming from this level from here. Okay, so what's inside the basket? So basically this is an all equity fund. So you have here the top 30 components of the Philippine stock market, the PSEI. So you have SM Group, you have Ayala, um, you have Deutsche Bank, BDO, JG Summit, and so on. So these are the top 10 components of um, the Philippine stock or Philippine Equity Smart Index Fund. So here we have our global equities. So this time, although an equity, but it's a feeder fund. So meaning um, it's completely mirroring, okay, mirroring the target fund. So our fund managers uh, would have less effort in managing the fund because it completely mirrors the target fund. So we will cover target fund later, but in my experience in global markets investing, this is by far again the most affordable feeder fund in the country. That's only 1,000 pesos. Other funds would require you to invest about 10,000 or even 50,000 in their dollar equivalents. But for this one, it's only 1,000 pesos. So you have to consider this, guys, as part of your portfolio, and it's then okay, in peso currency. So you don't have to own dollars to grab, let's say, dollar denominated investment, because this one is directly converted to peso. So you can make use of your peso to buy a dollar denominated investment. So our target fund here is actually the Invesco Global Consumer Trends Fund. So how the fund is performing, so we have the feeder fund here, we have the target fund on the red line. Um, if you're going to look at 1 year, it's not yet available because it's I think this is merely new fund in the market. But if you're going to look at the 6 months here, that's bouncing, a whopping 40%. No, basically because 6 months it still covers the pre-COVID or the COVID times or periods. So way back to COVID, let's say the first or second quarter of March 2020, we had that uh, COVID restrictions wherein we have very less consumptions, very low demand, and then here comes 2021 when the vaccination is actually rolling out, and then we saw that the consumers started to pick up demand. So that's why demand here and performance of this consumer trend fund pick up 40%, almost double than the benchmark. So a very good performance right there. So what are you buying here? So you have Amazon, you have Penn National Gaming, you have Alibaba, Farfetch, and most of these consumer trend companies in retail, consumer electronics, and gaming, and so on and so forth. So your regional exposure here using your peso, 1,000 pesos, is actually spread all throughout, economies of the US, China, Japan. These are largest economies in the world. So that's why, diversifying, if your um, risk tolerance or your objective would allow you to do so, you should grab these global equity funds, as well as the next fund, which is the Global Tech Feeder Fund. Now, we all know that during the COVID season, we were all working from home. We were, our students are studying from home. So that's why you can see here a very good pickup of gains. Okay, so again, this is a feeder fund. Uh, yeah, minimum of 1,000 pesos. You don't have to own dollar to invest in this tech feeder fund. So this is the target fund, Fidelity Funds Global Tech Fund. So how the fund is performing for 6 months, that's 25%, but for 1 year, that's 50%. That's 50% for 1 year. So you can see there that the bounce from the COVID is very, very profitable at 54%. So what's inside the basket you have here? Now, these are the top tech giants, Microsoft, Apple. You have your Visa for your online payments. You have Google, searching or browsing the web. You have Intel, for those microchips in our laptops or phones. Samsung devices for, let's say, online meetings. We have Cisco for hosting online meetings. You have the semiconductor and so on and so forth. And your 1,000 pesos is spread across these economies: US, Taiwan, Japan, South Korea, and so on. So again, a very good opportunity to diversify in global equities market for as low as 1,000 pesos. And for the asset allocation, guys, this is very, very subjective. So it would really depend on your risk tolerance and your objective in investing. So, for example, if you are conservative, okay, so you can focus more on money market, okay. But if you are, let's say, moderate, meaning you have some appetite for risk, then you can diversify to higher asset classes. Let's say um, you retain 10% in money market, but you grab 70% in bonds, and then you allocate 20% in equities. But if you are an aggressive investor, still I would recommend for diversification. Let's say don't put the entire 100% in equities. So instead, you still anchor your 40% to bond funds or fixed income, and then 60% of that allocated to the stock fund. So by having a diversified portfolio, you are not eliminating risk, but you are managing the risks, okay, to achieve the highest possible return with that same level of risk. So that's the purpose of having a diversified portfolio allocation. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.